Hey everyone, Nate Hedrick here, the Real Estate RPH. Welcome to part 3 of our 6-part series on how to buy a home. This one is all about financing. How are we going to pay for that house? So hopefully you've already used step 1 to figure out your budget and making sure that you're ready. And step 2 to grab a great real estate agent, start building your real estate team. Now it's time to figure out how we're going to pay for everything. So there are literally hundreds of different loan products out there across many different lenders and more than I could possibly go into in a single video. So we're going to try to focus on 3 main types. Now again, this is not all inclusive or even close to that. But the 3 main types we're going to talk about are conventional loans, government-backed loans, and then what I'll call creative financing or creative types of loans. So we'll start with conventional. And before I jump in, I want to make the caveat that I am not a mortgage lender or a loan officer or anything of that kind. I am a simple real estate agent, so this is for informational purposes only. So conventional loans, they make up a little over 65%, right around 65% of the mortgages in America. So they are the most common type of mortgage. And it's kind of what you think of when you think of a mortgage. It has the 15 to 30 year term, a fixed interest rate, usually requires between 5 and 25% down payment, depending on the type of loan that you're getting, and usually requires a little bit higher credit score. The advantage of a conventional loan is that it's pretty flexible. It can be used for multiple types of properties, from your primary residence to a vacation home to an investment property, and often up into a 4-unit multifamily. So a lot of flexibility built in there, which is nice. But the disadvantages obviously are you have to bring a little bit more money to the table. That down payment is a little bit higher on most conventional loans, especially if you're going to try to access the better interest rates, that is. So then we have what's known as a government-backed loan. And in most cases, we're talking about an FHA loan or a Federal Housing Administration loan. But there are other types as well, VA loans, USDA loans. All of these, though, are protected by the government in some way. Either they're insured or they're backed up by the government, so that if you default on the loan for an FHA or a USDA loan or something like that, it's protected. The government is going to actually pay the bank back for you defaulting on the loan. And so that protection allows them to open up that loan to a lot more borrowers. What that means for most people is that you need a lower down payment, you can have a lower credit score, and you can still access this type of loan, which is great. Sometimes these carry higher interest rates. Sometimes they carry private mortgage insurance, which can mean extra payments every month. But the nice thing about FHA loans is that they offer that ability to get a mortgage to a vast number of people. And some people that wouldn't have qualified for a conventional can now achieve that dream of homeownership with an FHA or other type of government-backed loan. So there's a big advantage there. Finally, there are a myriad of ways that you can get creative with your financing, meaning going outside of the 2 other options that we talked about. This can include things like seller financing, hard money lending, even house hacking, which can reduce your monthly payments by having someone else renting out part of your home. But the thing that most pharmacists get excited about or intrigued about are pharmacist loans or professional loans. And these are products that are set aside based on your occupation and have special terms associated with them. Often this means low down payments. I've seen as low as 0% down for some of these types of loans, and no PMI. So if you have a particular profession that has loans associated with them or has loan programs associated with them, you can absolutely tap into those as a way to get more creative with your financing. Again, usually this is reserved for physicians, pharmacists, think veterinarians, MDs. I've even seen a couple for lawyers. So definitely take a look if you have one of those professions and see what the terms of those loan arrangements might be. It's absolutely worth it to have that as one of your loan options or one of the considerations that you're taking a look at. All right, so to wrap things up, the last step, once you have figured out what type of loan you're going to look at, and even if you've decided on multiple that you want to consider, the next step is to get pre-approved. And what pre-approval does is it confirms with the lender that you are someone that they are willing to represent in a transaction. Specifically, it gives you a letter that you can bring to the seller at the time that you're writing a purchase agreement or an offer, and say, look, I've got someone willing me to offer me this money. I promise I'll be able to pay for this house. Please accept my offer. And so that pre-approval letter gives you a lot of power and a lot of confidence going into a negotiation, because you've got someone that said, I'm willing to lend you this money. And it's absolutely something you want to have in place before seeing a home. In many cases, your offer will not even be considered without that in place. So a good agent will direct you to get that pre-approval taken care of well in advance of looking at houses, so that if you find the right one for you, you can put in that offer and feel good about the fact that you have a good chance of getting that offer accepted.